Welcome to Money Matters for Law Firms, 4 ways to secure your finances in 2016. I'm Joshua Lenon. I'm your instructor today, and I'm the lawyer in residence at Clio. I'm an attorney admitted into New York, and if you're looking to chat with me on Twitter, you can reach me at Joshua Lenon. It's my social media poison of choice, and I really would enjoy speaking with you. And I want to introduce our other instructor today, Micky, who will tell you a little bit about what we'll be covering today. Micky, can you hear me?
I can hear you. Can you hear me?
Yeah, I can. I've just given you control of the mouse and keyboard. And if you'd like to walk us through what we'll cover today, let's get this underway.
Yeah, first of all, I love the title. I didn't come up with that, but the Money Matters for Law Firms, a little pun there. That's always good. But yeah, I'm really excited today. And what we're going to cover, I'll go through the, I guess, core points that we're going to go through. But then the overarching goal of it, what we're going to cover is these 4 that you can see right here: financial systems and organization, tax season preparation, trust accounting best practices, and maximizing time. And I know already when you see that, you think, it's kind of the scary stuff. And that's, every time I speak about this, I have to almost like apologize for talking about accounting. And that's really my goal. It's a big task today. But my goal is to help kind of bridge that gap and take us from a place of confusion, anxiety, fear, and moving into clarity. And that's these four areas are not the goals in and of themselves, but a way for us to get there. So a little bit about who I am and about who Kahuna Accounting is, because it's important in sharing that story, is we've actually been in business 20 years. For the last 10, we've had outsourced accounting, even before there was the cloud. But in the last 3 years, we've done accounting nationwide for businesses all over the country using Xero. And in the last couple of years, we've really focused on law firms. We have made that our focus, and we love working with lawyers. I tell people that all the time. Like, I've spoken with hundreds of lawyers in the last couple of years, and it's been a pleasure. We've really enjoyed it, and we've learned a lot in that process. And the whole idea of this webinar is really to just share some of what I've learned and what we as a team have learned in working with so many lawyers. And so I want to get that clear up front, that I'm not coming from a place of accounting expertise and I'm going to lay down these accounting fundamentals. It's more, how should you approach your accounting system, and what have we seen in terms of the fear and the pain and the challenges and the struggles, and then the other side of that, of what happens for a business and for a law firm when that challenge becomes more clear.
So Micky, it's
so when we talk about that challenge,
kind of your wish list as a bookkeeper for the law firms that you work with, things that you wish they knew.
Exactly. Yeah, I think there will be three key points to that, and it has to do with, number 1, prioritizing it, and number 2, having the right technology, and number 3, using a team. I know that as a solo or small law firm, you can feel very alone or feel like you have to do everything. It doesn't have to be that way. And so in our experience, there is a few things you can change that make such a big deal. And so when we talk about what is that challenge, or why do people cringe when they hear this topic, and that's mainly because it's a source of anxiety. The other is because it's a poor use of time. I'm going to get into that and how absolutely critical your time is as a lawyer. I don't really have to tell you that. You know it. But even though you know it, you spend a lot of time on things that aren't a healthy use of time. Actually, speaking of stories, I spoke with a lawyer who actually I encouraged him to be on this webinar, so maybe he isn't hearing this right now. I won't mention him by name. But he had reached out to us and he said, "This keeps me up at night." He was referring to his trust accounting, and so we're going to talk about that later. And the other piece is that for most, we look at accounting as like it's a neutral, like the best case scenario is that it's a neutral experience, like it's a necessary evil, and if I could just like have it not exist or have it be something I can survive, then I'm okay. What I want to do is kind of change that, shift that focus, and say, how can it actually be something that helps us, helps the lawyers grow, helps you feel more confident about how you run your law firm. And so as you look at those points, the big question that you have to ask is, does it have to be this way? And I think for most people, they think, yeah, it does. I'm a solo attorney. I have too many places to spend. I can't prioritize it. I can't do anything different. So making this a necessary evil is just kind of how it is. And so my perspective in working with all the lawyers that we've worked with is to say, no, it doesn't have to be that way. It can actually be better. So our goal today, like I said, is to move from a place of anxiety to a place of clarity. And I'm here to tell you that it doesn't have to be the way it is. There are tools and infrastructure in place to automate and simplify accounting. That's going to be a big theme, is to understand that the economy is shifting to where, and Clio knows this better than anyone, that the life of a solo lawyer or a small firm is becoming more and more common, and because of that, the infrastructure is shifting to support that type of business. And so if you're not taking advantage of what's possible, you're missing out, and there's a way to actually do it to thrive and to focus more of your attention on the things that you need to be focusing on. So like we were saying before, my wish list. So if we could work with anyone and have you approach financials in a specific way, it would really be these three things. And everything we talk about today is going to come back to these three things. The first is to make it a priority. I think that stands out above everything else, because I think for so many people it's put on the back burner. It's not a priority, and when I say it, I'm talking about just your financial system as a whole, how you're tracking, how you're getting reports, how you're getting these things done throughout the year. It's not a priority for many people, and so it's no wonder that it's an extremely stressful process. The second is to use technology to increase efficiency. I know sometimes technology can contribute to that anxiety, but it shouldn't. There's ways to make it very, very simple that I'm going to talk about. And third is to make it a team effort. It's more affordable than ever to get help, to get people that are experts in the right places working on what their strengths are. And so there's no use in you trying to be an expert in everything. So if you can bring these three things together and apply them to your accounting system, I think you're going to have a lot of success. So let's work through.
I've got a question for the audience. So I'd like to
yes, let's do our poll.
Yeah. And my question is, and let's jump back to kind of that systemized, how to remove the anxiety. Let's see where people are at on that kind of chart. So I'm going to ask, what type of accounting system does your law firm use? So it should be appearing on everyone's screen right now. We do ask you to participate in this because it's one of the ways that we track your attendance and your attention as part of today's participation for CLE credit. So what type of accounting system does your law firm use? Do you use dedicated software? Do you use a dedicated bookkeeper? Do you use both dedicated software and a bookkeeper? Or do you have a shoebox of receipts somewhere under all those piles of papers in your office? So we're going to leave this up for another 15 seconds. We're getting actually some really good responses. And I'm very encouraged. And I'll show you everybody what the response looks like. All right, with 80% of today's participants voting, let's see the results. We see that 33% of you are using a dedicated software. Only 8% of you are using only a dedicated bookkeeper, but 44% of you are using a dedicated software and a bookkeeper. That's really encouraging. And there's 15% of you that are desperately casting about your office right now for that shoebox of receipts. So I hope you find it. Yeah. Let's talk about taking all of the different parts, software, bookkeepers, and shoeboxes, and getting systematized and organized. So I'm going to hide the poll, and Micky, you want to take back over with step one?
That's perfect. Yes, and thanks for bringing that poll in. I love that. It's interesting. I actually had a call yesterday with someone, again, who was having this exact same conversation and said, yeah, my tax process is to compile everything into a manila folder and then send that off to my CPA at the end of the year, and I know that everything's not in there. And so that's what we're trying to avoid here with technology. So let's get right into that with getting systematized and organized. And really, what I want to talk about with this, so we're talking about the anxiety, and a lot of times when we think about the anxiety related to accounting, we think about the different systems or symptoms. So the things that make it anxious, for example, are trust accounting. How do I know I'm doing it right? How do I know I'm not getting out of compliance or doing this wrong? What about tax season? This time of year is very fresh in our minds. It's overwhelming. It's scary. Even if it's not overwhelming, it's just annoying. You know, it causes anxiety. I don't understand the viability of my business. I don't understand where it's going. Invoices, what if I don't get paid? How do I track those things? And simply wasting time. So when we attack improving our accounting system, we usually think about these things, these sources of anxiety. And we think, I'm going to do really a lot better with trust accounting, or I'm going to work with my CPA and try to get as much as I can out of tax season. But these things right here, all of these things are really just symptoms of a greater problem. And the greater problem is that we're not in a system that works. And so when you're not in a system that works, all of those things come out of it. They become these new sources of anxiety. And if you trace it back to what is the source of the anxiety, is that we're not in systems that work, that make these things easy. Because tax season can be easy, and trust accounting can be easy, but it's not because the systems don't work. So just to kind of contrast, when you are in a system that works, taxes can be stress-free. It can be a couple clicks and a conversation with a professional. Trust accounting can be confidence. You can have a scoreboard for your business. You can see a dashboard in real time how you're doing, tracking expenses, seeing where things are going. You get invoices paid faster because you're not dealing with paper and tracking them down and finding an invoice, which we've had this conversation too, that was lost for 6 months, and now you realize, oh, I forgot to collect that, and that's never a fun conversation. And it can save you a ton of time. And so a working system is really what we're after here. All the other things are added benefits, but the goal is to get into a system that works. And so the question would be, how do you get there? Thanks for telling me that we need to get into a system. Awesome. That's really cool. Well, it goes back to what we said at the very beginning. It's these three things: that you need technology that works, that you need to make it a team effort, and you need to make it a priority. So let's work through each one. Technology that works, really, for a law firm, you guys, I have to tell you, are at an advantage because there is some incredible software that is tailored to legal specific that is very useful and very helpful. And that's really where it starts. If you can have a practice management system that you're comfortable with, that you can use to track clients, to create invoices, that's mobile and easy to use, you're way, way ahead of the game. That's really half the battle, even in accounting, is getting a practice management system that works. And a good example of that is actually Clio. And so I'm going to let Joshua jump in for a second and kind of talk through how lawyers are using Clio to manage their practice and to have a big head start in using technology.
Thanks, Mickey. So there's a couple bits of functionality in Clio that I wanted to cover just to let everybody know how Clio can help manage a trust account and remove some of the anxiety around that. And the first of which is that, one, you can track trust accounts in Clio. You're actually able to track multiple bank accounts in Clio. So whether you're using an IOLTA or IOTA, combined client trust account, or if you have clients who require their own separate trust accounts, you can track all of that in Clio. And so here's an example of bank account details in Clio for a trust account that shows you simple things like the balance number, what client is associated with a particular sum, and what matter is associated with that sum as well. And you can even track kind of the history of your trust account, like using funds to pay invoices within Clio. So that way you always have an accurate and running total of your trust account. That makes it a lot easier to get a heads up on where does that really important and strongly regulated piece of your law firm operate. There's a little bit more to trust accounts in Clio. For example, you can also dive into the transactions related to a particular matter or a particular client in Clio. So rather than just seeing all of the things that happen in your trust account, you can go to their matter, pull up their ledger, and see specifically what has been charged or deposited or dispersed from that client's trust account. And it's a really easy way to help walk your client through where their finances are that they've deposited with your law firm. And Clio helps you take that information a step further and allows you to create trust ledgers and client ledgers to help you meet your monthly reporting that is required in many jurisdictions. I want to give a little tip here, and that I recommend that law firms who are doing monthly reconciliations print these reports as a PDF, and print's probably the wrong word. Download these reports as a PDF to give yourself that monthly permanent record of all of your different client and trust ledgers. So that way, depending on your jurisdiction, if you do a monthly or annual accounting, you've got the documentation to back you up. You can create these quickly and easily, store them in Clio, and have them available at a drop of a hat. So that way you keep up with your trust accounting. There's one other thing that Clio does that I think really helps with trust accounts, and that's we help you make it obvious to clients how their trust deposits are being utilized or sitting in the trust account with Clio. And that's we allow you to include a statement of accounts on invoices that includes trust account information. So here's an example that we pulled as well from a particular client invoice, a sample client invoice, not an actual client invoice, that shows you both deposits and payments and to what invoices those payments went, and then dispersals at the end of the matter where the money was returned, allowing a client to quickly and easily at a glance to know how their funds sit in your trust account. And so Clio allows you to be on top of trust accounting, handle reporting with trust accounting easily, and also handle client concerns about trust accounting, removing areas of friction between you, your bar association or law society, and your client. And with that, I'm going to hand it back to Micky to talk about an additional piece of technology that you may need. Micky?
Hey, yeah, that's perfect. So that is a great example in just understanding when you use technology and what you can do, what this statement of a report, this client ledger, that you can document that digitally in a place that you're comfortable, and that is such a key element to trust accounting. And I think step one for a law firm is to get that in place, to have a practice management system where you can manage your clients, manage the payments, manage the invoices, and do it in a very easy way. And I think a lot of lawyers have that. I think you guys prioritize the practice management side. I know a lot don't. I actually talked to someone the other day who literally keeps a piece of paper, draws a line in the middle, and tracks their trust ledger that way. That's probably not a healthy way to do things. But you can do that with the practice management system. But then there's the next level. And so everything we're talking about with the trust accounting fears or the challenges with tax kind of goes a step further. And there's a way to do it that integrates everything. And so what we're talking about is really adding accounting technology to the mix. And so what you can use, this is just an example, but what probably a really high percentage of our clients use is this exact combination where you have Clio as a practice management tool, you have LawPay or Clio Payments to accept payments, and what that can do is allow you to accept payments directly into the trust, which is how it should be when you receive a credit card payment. You use Xero for accounting, which we're going to talk about later, where it watches your bank account and Clio with the integration. And then using a system like Gusto for payroll, having live bank feeds, you can literally produce accounting reports and statements without entering data, that these things integrate with each other and work together. And so the point now is not saying, okay, go get all these tools, is to just understand that step one in this process of getting an accounting system that works is getting technology and understanding what technology can do to help. I don't want to get too far ahead of us because we'll talk about how to succeed, because I know what you're thinking. I've seen this part before as well, is that technology can often add to the anxiety. You say, well, we're here to reduce anxiety, and now you're talking about getting into new systems and setting up systems and getting them to integrate, and a lot of times when I try that, it's totally overwhelming, it's frustrating, and it doesn't work. And so that is a huge roadblock that I've seen with law firms, is that I know that this works, I know that the technology works, but where do I start? How do I get it going? Because all it's doing for me right now is creating more anxiety. So I'm going to talk about that in a minute. But for now, just understand that it is possible to get those things working, and when it does work, it can be really, really powerful. The second piece, so the three pieces here, use technology, make it a team effort, and prioritize. Second is to make it a team effort. And so I'll ask you something that I think should be pretty obvious with everyone, But if I was getting sued, would you advise me to? Would you say, hey, just take it as far as you can, defend yourself as far as you can until it's a mess, and then at that point, go hire a professional? Like, I don't think that many lawyers would give that advice. You would say, get a professional right up front. But that's what we see every day, is that the approach with accounting is, I will do it myself as far as I possibly can until it's a total disaster and I give up. Or maybe if it's not yourself, and we should have included this in our poll question, how many people's dedicated bookkeepers are a spouse? So that's the other side of it, is, are you doing it yourself, or are you having someone on your team do it who is not a professional? Because accounting is similar to legal work. You need to have a professional at least to get things set up correctly, get a chart of accounts working, and get you moving in the right direction. I think if anxiety is a challenge, doing it on your own is only going to add even more to that anxiety.
So the most important time to bring in a professional is kind of when you're setting up?
Yeah, absolutely, at the beginning. So I think most people will talk to a CPA at the beginning as they kind of structure the company. But what we've seen all too often is people will get Xero or get QuickBooks, and then just try to set it up on their own and never have any success with it. And so even if you weren't going to fully hire a bookkeeper or outsource your bookkeeping, you should absolutely have a professional set it up who understands the technology, understands what you're integrating it with, and get it going in the right direction, and then maybe you can keep up with it from there. But if you don't get it started correctly, and we've seen this from experience, the chance of success, even if you have all the right tools in the world, is very, very low. And so that is, I think, absolutely critical, is getting that together. And it goes into, just your total approach. Like, if you look at bigger firms, bigger businesses, they have accounting departments, and there's a reason why. It's because that is a professional task. Now, you don't have the ability to have an accounting department when you're a solo or small law firm, but you can find ways to surround yourself with people who get it, who that's their strength when it's not your strength, to get it off your plate. And an added bonus in talking about what we were just talking about with all these different tools that you're going to be integrating is to find a financial team that not only understands accounting and not only understands law firms, but also understands the technology. And so that's really step one in that question of the anxiety of technology. Part of working with the team is not only people that get it, but also get the technology, and that can hugely lower the anxiety that you're dealing with.
So we're getting some questions from people who love the advice that start with some professional input, but they're 5 years out. Is it too late for them?
That's a good question. No, absolutely not. And so really at this time of year we're getting calls every day with this question of, like, what can I do? What we've done with a lot of people is look at January 1st as a great fresh start time, and we usually do some campaigns around the New Year's, like, this is the year that can be better. But even if you're in March, there's no problem with saying, January 1st, 2016, let's make that a fresh start. Let's get into a new system, transition things over, and go from there forward in something that works. Because the real benefit is seen in so many ways, not only in reducing the anxiety, but also in just the knowledge it provides for you as a business owner. And so I don't think it would ever be too late to do it. Like, you're not going to maybe have the full 6 years of business in a perfect system that all works together and look at year over year, but you can set a balance at January 1st, 2016 and move forward and make 2016 an extremely smooth year where tax time for next year is incredibly easy, and you have those that stress reduced, at least from now on.
I'm reminded of the old saying that the best time to plant a tree was 20 years ago, but the second best time is today.
Exactly. Yeah, no, it's right. And as we go on and talk more just about the anxiety and the toll that these things take, I think it becomes pretty clear, like, and even the slide we're on right now, make it a priority. Like, this has to be a priority, just for your own sanity, your own health, your own. I know you guys have had the mindfulness webinar before. I think this ties into that. Like, anything that adds to your anxiety, needs to be cut out at all costs. And so that's probably the biggest advice is how can you make it a priority? How can you can you add clarity? And so in this slide, what is the ROI? What's the return on investment of reducing anxiety and increasing clarity? Like if you could just weigh that out. Like I have anxiety here. If I can take that down, that's worth a lot. And if I have muddiness and something that's unclear and turn that into clarity, what's that worth? And now we're starting to talk about some serious investments in the business that, like you said, the best time would be right now. Like why wait any longer if that is something that is a source of fear and anxiety? And so just to wrap up on that, so step one, getting into a working system, and everything else will move faster from here because now everything else is a benefit from getting into a working system. And to do that, it's really you get the technology that works, that integrates, that you get, and that reduces data entry and paper. You get a team that can at least help you know the tools and set them up well. And then 3, prioritize. Make it a priority because it's so important. Nothing else will matter. Like we can talk about simplifying taxes all we want, but if you're in a terrible system, it's never going to work. So these 3 things are critical to getting things moving. And so let's now move into that. So we're in March, and tax is on a lot of people's minds, and really it's the reason why I come onto these webinars, because people are thinking about tax, and this is the one time a year where we think about money instead of year-round. And so let's talk about simplifying tax season because it can be a lot easier. So for most people, this is really how it goes. It's overwhelming. It's frustrating. It's not at all valuable. If anything, it's really, really painful. It's a waste of time. And if there's any goal at all, if there's any objective related to tax season, well, it's number one, just getting it over with. But number 2 would be, how can I minimize my liability? That's usually what you hear. Like, how can I minimize my liability? How can I get some tax breaks? What are some things I can do for that? That's tax season for most people. So what I would like to do, and I talked about this last year, if you want to see this more in depth, we did a webinar last year on this exact topic. Actually, there's a whole webinar was about this. But what if you reframed the objective? Because really, your goal as a business is not to reduce tax liability. Your goal is to have a healthy business. Your goal is profitability and cash flow. And we've seen that question a lot. It's like, should I spend $5,000 on this because then it would be tax deductible? And it's like, well, do you want the $5,000? Like, the cash is more important than tax savings. Like, you could save $2,000 in tax, but spend $5,000. If you do that, is that really better for your business? Not always. You want to be intentional with your investment. And so the first step here is to kind of reframe the objective. What is our objective? And if it's to have a healthy business, I think there's a much better way to approach tax than how a large percentage of lawyers approach it. So let's have a better game plan. Step 1 goes back to what we've been talking about with the team, to have a professional advisor. And so what we've been talking about mostly in this webinar is to have a bookkeeper or someone to manage the day-to-day, the systems, the tools to get you into a system. It's also extremely important to work with a professional who understands tax, who can provide advice for tax, can do the tax return at the end of the year. Sometimes that is all in one, and sometimes it's not. It's very important to have that. And it's also important to have a system that works throughout the year. And so a main reason why tax is so stressful for people is exactly what I just said, that we don't think about it until the end of the year. And so from speaking to a bunch of tax professionals, their advice and their frustration is always, I can't help my clients succeed, I can't help them get any advantages, I can't help them strategize because we're always reacting, we're always looking backwards, we're always playing catch up. And if you're playing catch up, you may be able to, make a few adjustments or do a few things, but you're not able to get any type of strategic, regular advice. And so when you're in a system that works, you can have this type of game plan where you have a strategy and you can have a real, tax advisor who, when you work with them, you're able to invite them in, produce reports for them, and get more helpful advice. So what we're really talking about, the goal here in a simple tax season, and we have a poll question on this as well, is to be able to produce reports on demand. So if you can do this, if you can produce reports on demand at the snap of a finger, you are ahead of a huge amount of the population, a huge part of the game. And that does so many things for you. So I'll let Joshua, if you want to kick off the poll, I'm curious on
Got it.
this one to see.
So the question is, I can produce an accurate profit and loss statement for my law firm. And again, please participate in these to help us track your attendance and attention for CLE purposes. So a profit and loss report takes a look at like a past time period, like a month or a quarter,
Right.
and shows whether you're in the black or in the red. Right, Mickey?
That's right. Yeah, it's a time period. How the money in, the money out. What's been going on? And this poll could have just as easily said balance sheet, but just for simplicity's sake, I think that's a good one.
Okay.
And balance sheet would be a snapshot.
We're almost up to 80% of participants have voted. Let's give it like 5 more seconds. And let's call it. And what we're seeing is 52% of the people here are saying they can pull a profit and loss report on demand. That's really encouraging. But
yeah, this is a good group.
Yeah, 48% say either no or they're not sure that their firm is profitable, or if they can even determine if their firm is profitable, which I think is a bad position to be in. It actually leaves you and your clients potentially scrambling if a bad month happens and you can't afford to run your law firm anymore.
Yeah, and there's a lot of reasons why that this is so important, and it's you're right, like to produce these and understand profitability, but to be able to do it on demand now is a game changer in terms of tax season. Like for those 51% that can do it on demand, tax season should be very, very simple. Their CPA would say, here's the reports I need, boom, you produce the reports, and it's done. For the other 48%, it's a nightmare, because how do I do it? What do I have to do? How do I get it all together? And the CPA is either going to help you clean it up, and that's going to cost a lot of money, and it's going to be very painful, or it's just going to be a long process for you. And so to be able to produce reports on demand is very key just for simplifying this entire process.
So what do they need to do proper reports on demand?
Sorry, what was that?
Oh, you've just moved the next slide. You're answering my question.
Yeah, how we do it it's pretty simple. It goes over what we've been talking about. And so you need a proper accounting system. Any accounting system is going to produce these exact reports, Xero and QuickBooks being the top examples. The other would be to set up a chart of accounts. So I know you will receive a chart of accounts, a sample from this. That's key to this, because then the third step would be to reconcile those accounts regularly or find someone to do it. So every transaction that happens is going to, if you're using Xero, the bank account integrates, and those transactions show up inside Xero. That money was deposited or money was spent. Then the job of bookkeeping is to reconcile the accounts. That money was to this account from the chart of accounts. When you do that and it's all reconciled, you can, in one click, produce a profit and loss statement. So if you do these 3 things, however you need to do it, you need to have systems team and prioritize it to do it. But the actual nuts and bolts of it aren't that hard. And when you can really simplify this stuff and do it on demand and make tax season a whole lot easier.
So I actually included 2 different sample chart of accounts that I found in researching for today's webinar. One comes from the State Bar of Georgia, and the other comes from the Law Society of British Columbia. And they list a lot of different financial aspects of a law firm that you should be tracking and being aware of. And I was surprisingly in-depth. There were things like furniture and the financial value of the furniture that you're using being tracked. And I was really surprised by how deep they went. But I guess that gives you that 360 input that then allows you to run those types of reports.
Yeah, it's so helpful, and that goes back to the team conversation. To work with a team that not only understands how to book and or understand the system, but understands law firms is really important, because you guys are unique, and so why not find people that understand the in-depth elements of a law firm that's only going to give you more detail as you run your firm. So let's move to part 3, where Joshua and I will team up, and we already got into this a little bit, but taking the anxiety out of trust accounting. So this one's interesting. It's a little bit different than what we've been talking about in the other elements with tax and with getting into a system, because trust accounting, I feel like, for the most part, I think you guys do prioritize trust accounting. I think that maybe there's a few who neglect this, but I do think it's a priority for people. People understand how key this is, how important it is, how obligated you are to do this right. And if you're not sure about that, ask Joshua, and he'd be happy to tell you, because there are some serious
implications. Yeah, and it's actually one of the three most common complaints against lawyers is that they failed to manage client money in a responsible manner.
Absolutely, and I think a lot of that is maybe not because of doing it on purpose. I mean, sometimes I'm sure it is, but a lot of times it's more of just not knowing, or making mistakes, or not having good systems to tracking. And so that's what we're going to try to help. And so really the essentials here that you guys, I think, should know, but just to do an overview, is that you must always keep the client funds separate from your funds. So that's why there's the IOLTA account, to keep them separate. Money in trust is not yet earned. So that's the one, it's kind of bizarre to comprehend at first. Like, this money is in my bank account, but it's not mine. I haven't earned it. You actually owe it until you do work to earn that. It's very key to transfer money as it's earned and then document the movement. So that and I'll talk about that, common mistakes, but when you make that transfer, you must document the movement, and then you track client statements and produce reports on what's been earned and the current balance. So Joshua showed that earlier, how very easy that is to do in Clio, to show exactly what's happened with the client, so you can send them that report and they can understand what the balance is and why. So where does it go wrong? I mean, if it's simple and we prioritize it, we understand it, where does it go wrong? And this is where I'll really talk about some real situations we've seen at Kahuna. So at Kahuna, what we do is have Xero set up, and Xero is really a third check between a practice management tool like Clio and between your bank account. And so as the third check, we see when the two don't match up. And it's been actually very interesting that it's quite common that we catch mistakes. and what I brought up to Joshua at this webinar was that if we're catching these mistakes and having this conversation where we're like, oh, well, we saw that it looks like you recorded this in Clio, but the cash didn't move. Did you mean to transfer it? And the client will say, oh yeah, I meant to. Whoops, thanks for catching that. That if we're seeing that, how often is that happening with others? And it's not, like they've done it on purpose. It just happens, and that's why a third check is really important, and we'll get into that. But where it goes wrong, number one is a terrible system for tracking. That's the most basic. If it's just a spreadsheet, or like the guy I talked to the other day who had a piece of paper, you're setting yourself up for trouble. And if we're talking about anxiety, this is where I think you absolutely have to invest in a system to track this, to get it right up front, because it's too important. The other is to just deposit into operating. So I made money, I got a check, so I'll deposit in operating. Maybe I'll transfer it later. That's not healthy. You should deposit it straight into trust. The other would be to record in a Clio and then not transfer. So this is what commonly we've seen. You forget to transfer. You mark it transferred, you've already earned it, but you don't actually transfer it. And then the other is that you transfer it but don't record. So now you have to go back and dig and say, why is this money not here, not healthy? And then finally, marking the deposit as income. So if you make the deposit into trust, it's not actually income at this point. You haven't earned it. And so if you were talking about tax season, you wouldn't want to have that marked as income, because you're going to inflate it when you haven't earned it yet.
That's really interesting, because one of the unique things about law firms' accounting needs is the fact that we may have a lot of cash on hand in a trust account, but that cash is actually a liability in accounting terms than an asset. It's actually money we owe people, even though it's like in the bank, just sitting there.
Exactly. Yeah, and that's an important distinction. Like, you don't want to overstate your income when it's it's not your income. It's actually owed, and you're right. That's how Xero makes it pretty simple to mark as a liability. So it's owed until it's earned is really the best way to put that.
Okay.
So those are just some of the ones we've seen. And so we'll work together on this, Joshua, but I want to just talk through what a working system looks like. And so I've already given away really the best case scenario. If you have something like Clio that does practice management, can manage your client trust ledgers the way Joshua showed it before, then you can integrate that with Xero, which the benefit of Xero is that it can integrate with Clio to see the transfers, to see the payments, but it also integrates with the bank so that you are now having a third system in place, and QuickBooks can do the same. And then if you have a team member or a team that has your back and understands both and is looking at it, that's really the best case scenario. And so it really goes back to prioritizing it, having the technology, having the team, with everything that we've been talking about. And so let's work through what that looks like, and just kind of a basic example of getting paid and transferring, and how having a third system really helps to track that. So the first step in all of this is to receive the retainer payment. And so if you're using Clio, you would add the deposit in Clio. And so I'll let Joshua really walk through what that's going to look like.
You got it. So we actually call these an advance fee deposit rather than retainer, because retainers are an actual payment to the lawyer as opposed to an advance fee that needs to be held in a trust account. So when you're getting an advance fee deposit, you need to record that in your trust account, and you can do that in a new transaction in Clio. Just jump to the accounts page, or you can even do it in a client's matter, and this window will pop up, and it has several different fields for you to track important information. Importantly is picking the right account, like your IOLTA trust account, and the amount that needs to go in, as well as the date of the deposit. And then there's a lot of information that, while is technically optional, you can track a deposit without entering this information. Many jurisdictions require you to track some of this information. So the stuff that's listed as optional here is only optional from a technical standpoint, not from a compliance standpoint. So for example, many states require you to actually keep track of the check number that is used to deposit funds into a trust account. But you can then jump through all of these different fields, apply it to a client and a matter at the end, record that transaction, and suddenly Clio is keeping track of your trust advance fee deposit and starting to create those client and trust ledgers that you need as part of your monthly reconciliation. So Micky, once they've recorded the deposit, what happens next?
So then once they've done that, if you have a bookkeeper using Xero, what you would do is then start that liability account in Xero. So Xero would see it. You would enter as a prepayment in Xero, so it's not income, but it's a liability, and then it's owed until it's earned. So now what we're going to do is the fun stuff. We'll start to bill our time. And so once you do that, Joshua, can you show now we're going to receive payment?
Absolutely. So you created the invoice in Clio, and we talk about that in our Better Billing webinars. But then once you want to record it as paid, you'll again jump into that new transaction, or from the billing page, click Mark as Paid, and you'll see a window that pops up like this. And from here, you either choose the bill, or the bill is automatically populated in field 1 with today's date. You can choose the proper source of where that comes from. So down here, you'll be choosing from your trust account to the operating account and the amount that is to be paid. Now, Clio has also built in some additional functionality. So if you have a client that is paying for multiple matters, and so this could be a corporate client, or if you're tracking matters separately per individual client, you can actually expand that out by clicking the expand button and actually pay a client's multiple matters quickly and easily within Clio. Again, picking their trust account with the balance and making sure that you're working your way through. And one of the newest little add-ons to Clio is that we allow you to close a matter at time of payment too, easily setting the close date and kicking off your closing procedures directly from the bill payment received screen. So it's just a nice little shortcut that was asked for by a couple of users, and we threw in to speed up your workflow. But as you can see, it's really easy to grab the trust account balance that's specific to your client and to the matter, and apply payment directly within Clio. There are still, I think, a couple additional steps that Micky wants you to take.
Right. So then from there, I mean, that's all exactly what is needed in managing everything on the client side. And so the only thing left now is to use an accounting system to document where the money has gone. And so when you've created that bill in Clio, just like Joshua has said, that's going to sync to Xero and show that it's awaiting payment. So when you do that, now you want to reconcile the transfer. So I keep using that term reconciling, but in accounting terms, all that is documenting where the funds have moved. And so when you've made the transfer at the bank, you now are going to open that original prepayment invoice in Xero, and then you credit the invoice with the transfer. And so what Xero is doing is providing that report on everything that's happened at the bank with cash movement, and at Clio with your matters and client interaction. Xero is now a financial report that provides a third check on all of it. And so there's really 3 levels with trust accounting, and I think too many people stop at 2. There's the client side in a practice management, reviewing the trust account ledger, where the funds have moved, what has been earned, and what is still in the account. Then you're going to compare that to your bank account totals. You want to make sure that the totals are lining up. And then you also want a third system. You want a third system that checks the 2, because if there's ever a discrepancy, you're not really able to dig in and find out why. With Xero integrating with Clio and seeing where funds have moved, seeing where these deposits are made, and then also watching all the bank activity, you should be able to match all 3. And if all 3 match, you can absolutely take a deep breath and have peace of mind that everything's working. And that's really what we're talking about here is reducing that anxiety. And I think trust accounting, a lot of that anxiety could be reduced because it's not a lack of understanding. It's not a lack of commitment to it. It's, I think, a lack of tools and not really having this third check in place. And not only a third tool, but also someone watching it. And I feel like that's important just because we've seen it so much. And I know that people struggle with that, and so having the third check is a major step in what we're talking about in reducing anxiety. So let's get into the fun stuff. So we've talked about, just to recap, we've talked about 3 things so far. We talked about getting peace of mind with trust accounting just then to reduce some of that anxiety. Talked about simplifying tax season. We've talked about getting greater business insight, so being able to produce a profit and loss on demand. Like Joshua said, do you know if you're profitable? Can you find that out and understand why? Getting into a system, like we talked about at the beginning, does all of these things, but there's still more. There's still something else that the right accounting system can do for you that I think is even more important, and that is getting time back. Time is our most precious resource. It's a non-renewable resource, and it is at a premium, especially for you guys, for you lawyers who are working so hard and running a business all at the same time and doing marketing and doing accounting. It's crazy. And so if you can do anything to get time back, that is a major benefit and a major step forward that really is just as important as anything else we're talking about. So a couple stats I want to work through. This is, I think, really eye-opening with people that I've talked to. And it's that lawyers in big firms, they spend 80 to 90% of their time on billable work because there's a structure, there's systems around them to take care of all the stuff that's not being a lawyer. And so all of their time is spent being a lawyer and earning money. In a solo and small firm, that number goes down to 40 to 45%. So now the battle that you guys are facing and the most important thing is how can you inch that forward? How can you turn that 40 to 45 into 55, into 60? What does that do? What impact does that have that you can get more of that time back? Because it's critical when you are spending time on things that aren't helping you grow and aren't doing what you're best at. So I like to say it like this. In a small firm, you have to be absolutely relentless in how you use your time. You already don't have enough. Like even the clients that we have that have it all dialed in beautifully, they don't have enough time. And so to have anything that is creating more time, that is completely unnecessary or that could possibly be taken off your plate is so important that it can't be overstated. So The other stat, I talked to Joshua about this, but I was at a conference last week, an entrepreneur conference, and this stat was brought up several times. I think it was actually an Intuit stat, so we're talking about QuickBooks a little bit. And that stat is that by 2020, 40% of the workforce will be self-employed, is what a lot of people were saying. So I like to say that you guys are part of a revolution. This is where the economy is going, is that people will start their own shops, start their own freelancing or law firm or accounting, taking your skill and turning that into a business. That's where things are going. And so that is a good thing. That provides a lot of advantages for you guys because tools, systems, and infrastructure are now being created to support this new economy. So use the big firm example, they already have an infrastructure around them. Now, as you move into this solo market, there's ways to create an infrastructure all around a solo so that you don't feel alone and so that you have tools that are efficient like Clio that make your life easy. So don't make that shift. You've already made the shift if you're on this webinar, likely you're in a smaller firm, but don't bring over old paradigms into this new world because it's not going to work well and you're setting yourself up at a huge disadvantage. And now, going back to what we're talking about today, unfortunately, accounting is a major waste of time. Everything we've been talking about is time. So it's not only the anxiety, the pain, the difficulty, the lack of insight, but it's time. The tax season where you're going back and forth and gathering receipts is time. The stressing over trust accounting and doing an extra double and triple check to make sure it's right is time. Entering data, moving it from system to system is more time. Doing reconciliations, if you're still doing that, time. Moving paper, catching paper, chasing down receipts, trying to understand what your client owes you, all these things take up so much time, and you're setting yourself up at a huge disadvantage when you're spending time on the things that aren't growing your business and aren't being a lawyer if there's a way to reduce that time. And so as we start to wrap this up and head towards the end, I know we'll have questions, is thinking about what is the ultimate victory in an accounting system. It's that you have this confidence. So one way to reduce time is to not even care and not even do it at all. That I don't recommend, is to have confidence in your financials and at the same time spend your time where you're most valuable. Do what you love, do what you're great at, and do what brings in business and revenue. Anything else you can get off your plate is you need to be doing. So to add this up, what type of toll, we talked just a bit ago, Joshua, you asked, when is the time to change? Well, this is how I would think about this. Adding up the toll that this is taking. When you're wasting time and pulling you away from meaningful activity, when your anxiety and stress is going up, when you're at risk with trust accounting, when you have no insight into the health of your business. You add all those things together, that takes up a gigantic toll. And that's a ton of anxiety and stress. What type of toll does that take? And then on the other side, what does this look like? What would it be to have a firm with the perfect accounting system where you have peace of mind, where your tax season is simple and just a couple clicks and you can actually get some advice, where you have greater business insight and strategy, you have a team that surrounds you that has your back, that helps you when things are off, you can invest your time in things that are meaningful, things that are actually driving the business forward, and you have professionals at all aspects. You don't have, no offense to your spouse, but they're probably not as professional in bookkeeping. If they are, then that's perfect. You got a good deal. But for most, it's not, and that's not healthy. How can you create this perfect accounting system? And I think what we've walked through today is really a blueprint for how to do that. And so just to recap, to move forward, where do I go from here? If the technology is overwhelming, if it seems stressful, I would start, number one, is make this a priority. And I think that should be very, very clear. Just when we look at that toll that it's taking to have that stress and that time wasted, these things are a priority. Even if you don't want to make accounting a priority, you make your time a priority, make reducing your stress a priority, and because of that, make your accounting system a priority. Second, finding a team you can trust. I can't emphasize that enough. I'm not saying that has to be us. I'm saying find someone you can rely on that understands you, understands the tools you're using, and can give you some peace of mind. And third, get the right tools. And so I can't say enough good things about Clio and just from the feedback we've had. But get the tools that allow you to be comfortable, that streamline your financials, that make it easy, that get you away from paper and systems that are inefficient. So thanks so much for listening. I really appreciate it. I know we'll get into questions, but I wanted to let you know that you can find out more about Kahuna Accounting and what we're up to if you go to kahunaaccounting.com, and you can also go to kahunaaccounting.com/Clio, find out more on what we're doing with lawyers, and you can reach me, Micky, at kahunaaccounting.com. It's M-I-C-K-Y. I'd love to hear from you, hear your thoughts, hear your own experiences. I love hearing the stories, and happy to help out any way we can.
Just threw that link into everybody's chat, so you can cut and paste it from there. And we've got one question for you before we jump into questions from the audience,
Sure.
And that's, would anybody like more information about some of the tools or services that were offered today? And so we'll just leave this up for a quick 30 seconds, and then we'll jump into everybody's questions. So Micky, all the law firms that you use, how big a percentage of them are on a practice management system like Clio?
I'd say 80%, 80 or 85%.
That's really encouraging.
Because we usually tell them to, even if they're not.
It makes it easier for you as a bookkeeper because they're organized, right?
Oh, yeah.
Yeah.
Absolutely. And we're actually Clio certified, so we've kind of taken it upon ourselves to understand that. And so we love it when our clients use Clio just because it's something we understand and we can provide help on both sides there.
Perfect. All right, I'm going to close this poll and let's jump directly to everybody's questions. So I hope everybody's typed them in. Our first question actually comes from Twitter from Matt, who is asking, why do you guys prefer Xero? You used it several times as an example of an accounting system. And I'm going to throw
I knew that was coming.
My information if people want to, if people need to duck out because we're right at the end of our time. You can always send questions to me via email here. Okay.
All right. Yeah. So I knew that question was coming, and it's a good question. And actually, I don't have a big problem with QuickBooks. It actually, when we decided about 3 years ago that we were going to take our accounting system nationwide, we sent our accounting team on a quest to find a system to do it. And in that quest, they just found Xero and fell in love with it. It's really that's people always look for this answer of like pros and cons. It's really a matter of personal preference. We fell in love with Xero and we've stuck with it, and they've been a great partner for us. And the software has been great, and the people we've worked with have been thrilled with it. But it's not this negative on QuickBooks. The only thing I would say related to that, related to finding a team that you can trust, I would say don't focus too much on the software, focus on the solution. So if you can find a team that can help you, find a bookkeeper that can help you, find a professional that can help you, ask them what they prefer. Because in a perfect world, you as an attorney shouldn't be in Xero too often, or QuickBooks, either way. But to answer that question, we found Xero, we loved it, and the integration with Clio is great, and so we've just stuck with it.
Okay. And Matt continues to ask, is Xero appropriate for Canadian lawyers?
Yes, it is. I believe so. Kahuna, we don't actually work with Canadian lawyers. I think there's just an extra tax requirement. We love Canadians, but it hasn't worked for us. But I do know that Xero supports it.
Okay. Yeah, and if there's Canadian lawyers looking for a service like Kahuna, I know there's Bench out of Vancouver that might be an appropriate choice. So our next question comes from Monica, who says, from an accounting perspective, should your trust account be on your books? The method you show kept it on your books with an operating entity, even though it's technically in an IOLTA account in a separate bank. Is that acceptable for trust accounting? So the answer, Monica, is yes, but I want to clear up that they are being kept in separate ledgers. So it's not that we're lumping operating expenses and trust account transfers all in the same ledger, but that we're maintaining multiple ledgers quickly and easily. And when we make a transfer from one to the other, it's noted on both of them. So it is okay to keep your trust account in a system like Clio and Xero, so long as there's adequate tracking of the money, the sources, and the disbursements of where they go. Micky, do you have anything to add to that?
Yeah, I should have brought in screenshots like you, but I could show you like on a Xero dashboard, for example, you will see an IOLTA, you know, item on your dashboard. You'll see an operating account. You'll see a savings, like however many accounts you have, they're kept separate, and then the full financial report then can be drawn from all of that story, but each account is actually kept separate.
Yeah, I think that's really important. And I'm glad you helped us make that clear, Monica. So Victoria asks, how does Kahuna Services fit into the accounting process described in this webinar? So I think it falls under the team process, but I'll let Micky address that a little bit more.
Yeah, I think it's absolutely, it's everything. It's what we can provide is everything. If you were to hire a bookkeeper in-house, we can do that. So we would do all the reconciliations. We would manage the Xero side of things. We would help in the Clio side of things. So on the technology, making sure it's all set up properly, making sure the chart of accounts works. We have lawyer-specific chart of accounts because we have so much experience there. And like I was saying in the example, we catch mistakes and we can point those out. We're reconciling every week, and so we produce a profit and loss statement, a balance sheet, statement of cash flows. We're doing those every month, and even so for some clients, we actually help with the invoicing and billing, depending on the level of services. But a typical situation is the lawyer would be really, really good in Clio, and then we use Xero to do all the bookkeeping and reconciling.
That's perfect. Nadia asks, you have multiple matters billed from one client trust account. And Nadia, the answer is yes, but you may track deposits separate to each matter. They'd be stored in one trust account, but a client may ask, for example, that $5,000 be deposited towards matter 1 and an additional $5,000 be deposited towards matter 2, and you would track the linking of those deposits to the matter in Clio. We do have functionality that allows you to transfer funds from matter to matter. So say the client burns through $5,000 on matter 1 and decides to use the deposit from matter 2, we make sure that you keep accurate records of that transfer. And so again, that'll help with your reconciliations that you need to do. Claire asks, what do you recommend if you're just getting started and your practice is still very small or part-time? Do you recommend getting a bookkeeper? Claire, I think Micky raised a great point that starting out is probably one of the best times to get a bookkeeper. It may not be something that you keep full-time, but somebody like Micky or Kahuna can really help set you up with a system that will grow with you in the short term and prepare you for the long-term growth of your law firm. Micky, do you have anything to add to that?
Yeah, I love that question because that's something that we've seen for a lot of times. There's kind of like a no man's land when you're getting started, and there's no good answer. And so we've actually created a solution where we'll do the full setup, we'll integrate the systems, we'll train you on Xero, and then kind of back off from there into a support-only role. And so I think that's really a best-case scenario. If you can, even though things are tight, budget's tight, and you don't want to go all in with a bookkeeper, I definitely would recommend investing a little bit up front to get the system going well, because it's worthwhile, and it's maintaining it when you're small and when things aren't moving is not too bad. But if you just kind of wing it without getting set up well, I think that's going to cause more problems. So yeah, I'd recommend investing and getting it set up properly, but then you could maintain it DIY until you grow into needing a bookkeeper.
Okay. John asked, do you recommend holding the company's trust account with the company's Xero or QuickBook account, use a separate company file, or just use Clio? John, I actually think we're recommending that you combine two of these and use the company's Xero or QuickBooks account and Clio to track your trust account. And that'll give you kind of an extra set of eyes that will allow you to reconcile them much more easily than if you just track it in one system. It acts as a double check that syncs but still recognizes error. So David asked, if money is being paid to a firm for work already done, that the money is already owed, is there any reason to deposit the funds into the trust account before moving it over to the operating account? David, for the most part, no, just deposit it directly to operating unless there is a dispute about those funds, all right? So the client may pay but protest at the same time. Ethically, you're required to deposit those funds into trust until the dispute has been resolved. But it's for work that has been already done and appropriately billed, then you can deposit the money directly into your operating account. Peter has a question for Kahuna. What size law firms do you typically work with?
Yeah, so for us, it's really 1 to 8 is our sweet spot. We haven't have any clients that are any bigger than that, but yeah, anywhere 1 to 8 is an awesome fit.
So about 8 lawyers. Got it. Okay. And we're just getting to the end of our questions, so thanks everyone for sticking around. Gary asks, several states have opined that a law firm needs to set up a separate business with separate credentials for their trust account in their accounting software, not just separate banks accounts. How do different practice management and accounting software tools address this? So I've read those opinions, and it's not a separate business, but it is making sure that your accounting system tracks it as a liability, not as an asset, is what they're really talking about, Gary. And so everything we've talked about today does help you meet the accurate tracking of trust accounts as a liability rather than an asset. And that's what they're looking for. They do recommend separate credentials as a way of making sure you have a stopgap measure when you're dealing with trust accounts. So nobody can just use the same PIN number and password that you have for your operating account for your trust account. It's just an extra step of security. And so that's one of the things that we do recommend that you do as well. Our second to last question, Beth says, in Canada, it's a serious offense to withdraw funds from trust accounts without having first billed the client. Beth, that's absolutely true. Thank you for bringing that up. That's actually the case in almost all jurisdictions. You do need to have given the client reasonable notice via their bill of the money owed before transferring the funds. And Clio has several methods of actually sending the bill to the client that will help you prove that you've given them reasonable notice. And our last question is from Peter Jacobson, who says, can you define systems for us? We mentioned having a system several times. Is it software, hardware, or a combination of that with networks? Micky, the last word goes to you.
Yeah, that's a good question. I'm glad you asked that because it's one of those buzzwords of systems. Typically, I'm referring to an approach that simplifies things. So whatever you can do to set up to make things, to accomplish what you want to accomplish as simply as possible. And so in accounting, what you want to do is be able to produce financial reports. You want to be able to track what's happening with financially. You want to get taxes done easily, and you want to have that second set of eyes on your trust account. So the system is whatever allows you to do that as good as it can be. And so what you want, and typically what I'm referring to in this, has to do with software. So really no hardware required. And so to get to that system as efficiently as possible, we recommend using something like Clio, something like Xero, software tools. Now those aren't the system themselves. The approach you take to it is the system, and so that's also where the team comes in. And so if you have a team that understands accounting systems and processes, that helps. But primarily what I'm talking about is using tools that are the most efficient they can be to accomplish what you want to accomplish. So that's a good question. But I think it's a combination of approaching it well, having tools that work, and then having a team that understands how to make it efficient.
Excellent. Well, thank you, Micky. I want to thank everyone for attending today and for all the great commentary we got on Twitter as well. I'd like to just go ahead and announce that we'll be sending coffee to Leah Mayerson, who used her 7th tweet ever to participate in today's conversation, and also to Christine Ng, who had threw up actually a really delightful GIF, depending on how you want to pronounce it. I thought actually went a long way towards making this a fun presentation for everyone. So look for a coffee gift certificate in your email at the end, and thank everyone for attending today's presentation. We hope that we've given you an idea of how to remove anxiety from accounting and some tools and tricks and opportunities that are out there for making it easier to handle the money that matters to your law firm. Thanks, everyone.